Welcome everybody to our Black Diamond Team Roundtable discussion. We thought we'd do something a little bit different this go around for this quarter. I want to introduce you to all of our team and then just throw out some topics for everybody to kind of chime in on. I know there's a lot going on in the marketplace today, and I just want to get some good discussion. So why don't we start with some quick intros? Josh, how about you?
Hey, I'm Josh Perry. I'm the business development leader.
All right, Clayton.
I'm Clayton Forbes. I'm an intern.
I'm Chase Piotrowski. I'm our M&A associate here.
I'm Lane Off. I'm one of the M&A leaders here.
Andy Reithmeyer, M&A leader.
I'm Sydney Billington. I'm a summer intern.
All right, and I'm Christian Baldwin. It's good to have you all here in one room, and there's a lot of topics about business that we could dive into. Right, we only have a few minutes this morning, and I thought maybe we'd start with you, Sydney. Sydney, you have a great background, everything from athletics to academics, and you've done a lot already in a short lifespan. That you're still young, have a lot more ahead of you. But every good business starts with good leadership, and I wanted to ask you, what characteristics do you think define a good leader?
Yeah, so I think some of the main ones include integrity, emotional intelligence, and then having a motivational factor as well. I think for having integrity, you have to be able to be transparent with your team or your group that you work with, because I think it builds a good foundation for building those relationships with your team and also building trust as well. For emotional intelligence, being able to understand your team is one thing, but being able to understand your own emotions is another. So that can also help in contributing to effective communication. And for motivation, being able to be a motivating individual, I think allows for your team and your group to work optimally.
That's great. That sounds like a good, almost textbook definition. Does anybody have an example of a bad leader?
Half my sport coaches as a kid.
What made some of them not so great, do you think?
They were somebody else's dad.
That was a big one. Playing favorites, right? Taking certain team members over others, right? That plays into that. An example could be, choosing certain coworkers, and putting them in certain positions and not choosing to elevate the rest of the team. I think, and a good leader to that turns around and not only tries to work with everyone and grow everyone, but they put themselves first in line, right? A bad leader tells you what to do, and a good leader, you follow them, into the charge. So there's a lot of different ways to look at it.
Yeah, true. You played a lot of sports too. You have any examples of either good or bad?
I think it's just a lot of favoritism in my experience with coaches, but it's definitely a problem. I try to fix it.
Yeah. That's in all levels of business too, I guess. Favoritism and maybe getting priorities out of whack. All right. Anybody else have any examples on that one?
Well, I think to Sydney's point, the classic mean boss yelling and screaming and getting emotionally overcharged is probably the worst situation for a bad leader.
Yeah. I agree with that. Okay. Anybody else have any comments on that one? All right, let's switch gears for a second. So, artificial intelligence is all in the news, and it's seems like it could take over things. I don't know. I wanted to put this question to you, Clayton, because you're younger and probably have a better idea of the technology and whatnot. What do you think is going to happen with AI in regards to business in the future?
So first off, I think definitely it will improve efficiency, just like by reducing smaller tasks, and I think that in turn could potentially reduce costs, certain expenses. And I also think in research efforts it will be very useful. Just getting rid of some of the smaller details definitely will create a timeliness factor. But I don't think that AI will have the capabilities of taking over like management positions. I think it'll just be like smaller tasks that it'll be able to do, but I guess we'll see in due time.
Yeah. It's good thoughts. What do the rest of you think?
I think one of the issues with AI is it gonna replace a lot of jobs? And I think the short answer to that is yes. It will replace some of the smaller management tasks and some of the informational tasks, but it also will create a lot of jobs in that people that know how to operate with AI and know how to utilize those services, that it will expand upon the jobs of those people for sure. So I think it'll do both. It'll be somewhat detrimental to some jobs, but it'll also create a lot.
Yeah, I was with a group of guys the other night, and they started talking about this, and they said, radiology is a field that is at risk. And I said, okay, explain why you think that. And they said, well, here you have some of the most highly trained medical professionals, and they've done all this training and whatnot, and they're highly compensated for their skill. But I guess they're already uploading, millions and millions and millions of scans with diagnoses, right? And so I hadn't thought about that, but I think there are some subspecialties, that if you compare, okay, look, this computer just read, 10 million, x-rays or scans or whatever, and they have these outcomes and these ranges and parameters. How do you compare that to, a human trying to do it? So there's some things like that are just question marks, I guess, that, that are real impactful, I think, in terms of how we train, how we educate, how we learn things, how business is going to be done. It's amazing to think about. It's 2024, just since the late 90s, how things have evolved so fast and so much. What's that going to look like in 2050? I mean, it's going to be totally different, right? I can't even imagine what the world might look like, at that point in the future. Are we scared of artificial intelligence?
I think it's just a tool like anything else. It's like how you utilize the tool and your knowledge behind the tool is what really makes it effective or non-effective. And that makes it nothing to be scared of. It'd be like being scared of a hammer or a wrench, right? If you don't know how to use it.
I have smashed my fingers if you take
Well,
that.
yeah, and I think there is some kind of smash your finger moments that we're gonna have as we work through different data sets like you're talking about in radiology and upheaval in a lot of industries. But at the end of the day, as Andy said, I think there's a lot of jobs created, especially in the data science field, and working through these data sets and large language models that will come to light.
Yeah. Good perspective. Okay, so since you're our business development leader, I know you're talking to a lot of business owners every day. What are maybe some of their fears, frustrations, and challenges right now as they try to lead their businesses?
Yeah, I think there's, and some of this is because of AI and some of the other things going on in the market, there's a lot of upheaval in different industries, and so they're focused on, pushing the revenues as high as they can to keep their profitability high, and then hiring has become, a huge thing in today's market, and getting the right kind of talent that, number one, is willing to work, and number two is, available to work and knowledgeable in whatever they're trying to hire for, in particular the trades.
Mm-hmm. Yeah. Anybody else have any recent conversations that have been enlightening to what business owners are facing right now?
Yeah, I think a lot of things, sort of what you said there, right? We're talking to them every day, and I think a few years ago, right, labor was probably the hardest thing that people were going after. They were trying to find people, and not hearing that as much. That used to be the start of half the conversations I felt like we had. It was like, hey, I'm trying to find someone. Hey, I can't get to it because just trying to get the company going, and we don't have enough people. But now we don't hear that, right? People are working, so that's one big benefit to people and different companies that we're with each and every day.
Yeah, I would agree. Insurance seems to be a hot topic. I know some business owners that I've spoken to recently are trying to figure out, are they covered correctly? Do they have the right premiums? Everything seems to be increasing. There's so much cost there and whatnot. So that's one I think that's on the top of mind for some of these groups too, these businesses. Andy, do you think any particular industries, we've talked a lot about verticals and things like that. In your opinion, are there any industries that might be more primed and ready for M&A activity than maybe some others?
Yeah, let me think about that one for a second. You know, I think M&A activity across all sectors is gonna increase, but, you know, particularly technology related, things like, software companies, telecommunications, those sort of activities. You know, I could see where that seems to be expanding quickly, and I think AI will actually help expand some of those companies quicker. And so I think that, I would be, very interested in seeing what research set tells us with telecommunications and software and technology-oriented companies. I see that as, exploding on the forefront for sure, so.
Do you guys think private equity is gonna get involved in college athletics and NIL, things like that?
I mean, they've made their way into professional sports. We've seen that over the last, 5-10 years, and probably weren't there as much, a few decades before that. So, I mean, you can tell that they've been in sports and they start to understand that. So, I mean, I think they'll find a future avenue, but as we know, it's kind of the wild, wild west right now. You know more than us. So as that continues to evolve in the rules, we probably might not see that until, they kind of get a clear path.
Do you think they could fix it?
You know, I think agents, you look at what agents do, for athletes, and traditionally, they have been a negotiating arm, is what they do, is they negotiate contracts, for an athlete for their services. They're gonna have to add more marketing, because that's where that's where that revenue comes in, is the marketing part, is how do you get those sponsorships, how do you get people willing to pay money to sponsor an athlete, to wear their shoes, to wear their clothes, to do, put badges on their uniforms or whatever they do, or to give the weekend, speeches, commercials and that sort of thing. So I think there's a whole market that's gonna explode in that field. How do you put all that stuff together? How do you create the value?
Right.
So.
Yeah, and back to your point on technology, right? There's probably an avenue there, right? All these universities, if they come back to managing all this process, they're gonna need the platform to do it. So there's probably gonna be a handful of good companies that come up from that.
Yeah.
Sure.
And I think if private equity doesn't get directly involved, they might push some of their portfolio companies to make NIL deals with athletes at their school that they went to, or things like that. So if they're not directly, they're definitely indirectly gonna be involved at some point, I think.
What do you think?
I agree 100%. I think that whole industry is evolving every day, and there's new things that I hear, just like listening in on my teammates and everything, and it definitely is possible.
Yeah, fascinating stuff for sure. All right, Chase, let's turn to you for a second. Since you see a lot of private financial statements, tax returns all day long, question I have for you is, have you seen any changes in balance sheet structure, specifically since, I guess, the last couple of years where we've seen a rise in inflation and business owners have a different set of challenges? Lane mentioned labor. Some labor has increased over the last couple of years. Maybe it's flattened out a little. What are you seeing on corporate structure now for private companies?
Yeah, I think a lot of companies, when they find the labor, they're gonna have to pay a little bit of a premium for that. So that's directly being seen on the P&Ls and affecting that bottom line, for sure. And then from the balance sheet, I think a lot of companies, because the cost of debt is so high, they're maybe leaning into more repairs and maintenance to their assets rather than buying new ones. To get, equipment loans is a lot more expensive today than it was maybe a couple years ago. So they're trying to get as much of their current machinery and equipment rather than replacing those machines, so they can kind of save on cost and get every last penny they can out of it before they have to replace it.
Are we seeing more mezz debt and things like that on some companies' financials maybe than we used to, or what's the debt structure look like on some of these things?
Yeah, I think, a lot of the people that got the good deals a couple years ago are kind of trying to hold on to them as long as they can, because they
Right.
know if they go out and try and get that same deal today, they're not gonna find it. And then, yeah, there is a little bit of increase in mezz debt as people are trying to be more flexible of, you know, where can they go get financing? I think they're a lot more open to non-traditional bank financing. And until we see rates go down, I think we're gonna see that increase as well.
Yeah. On Bloomberg this morning, they were predicting, 2 rate decreases, I think, between now and the end of the year. So we'll see if that happens. I mean, who knows? Coincidentally, there's an election in November.
Yeah.
So
We'll see.
We'll see. That's right. Yeah, that's good. I think things. I agree with you. I think the capital structure is a little more complicated than it used to be, right? Because you might see some seller financing on someone's books, or mezz component, or convertible options or something like that, where it's not as maybe straightforward as it once was, where you just had one primary lender, and then just that was maybe have been the only piece of debt that was there. So now it's kind of parsed that a little bit more maybe. So but as long as it works right and the ratios are good, then it can be a good solution. So all right, Lane, let's go to you now. So question I have for you is, in 2023, that everybody was kind of looking at rates increasing, and the whole attitude with the market, the economy and the market was just one of like, okay, well, we're gonna have to just tough it out, and the motto really became survive until 25. I heard that a lot, right? Well, here we are, we're in the second half of 24, essentially, almost, and it's gonna be 2025 before you know it. I can't believe it. It sounds crazy. What do you think 25 is going to look like in terms of the economy and M&A activity? Get your crystal ball out.
Yeah, my
right?
crystal ball.
Yeah,
not an economist, but
yeah.
can always try my best.
What's the general attitude and mindset, do you think, looking forward?
Yeah, I think it's a little more optimistic. I mean, looking back at 22, 23, we were always talking about, wait the motto, wait till 25, let's get to 25, and then it's like, oh, that's forever away, right? Now we're pushing on the door of that. So there's a little more optimism. I know that with us, we're seeing a lot more sellers come and play over the last handful of months. I think a lot more buyers are, feeling good about the market as well. I think there's, back in 23, we had, rates were lower, everyone was kind of used to that, and then the rates started jumping up, and everyone was kind of freaking out, how do we structure these deals? Well, now people have been doing deals for the last couple of years, and now they understand, how to structure them, even though rates are at, real recent highs. So I think with that, we have a background of, we know how to get deals done, but also in the recent Fed information back from January, the last report, inflation, I believe they were still above 2%, but it wasn't at the highs we saw of 9-10% a few years back. And the job market, as we talked about, is getting tighter. There's low unemployment lows, even though I think it was about 230,000 a month in job increases across the country. And then of course the GDP went up about 3.1%, which is much higher than the year before. So overall, even in this higher rate market, we're seeing an improved economy and just those metrics, which is a big bonus. So that's getting buyers and sellers a little more optimistic about this coming year.
Yeah. How about anybody else? What do you guys think the outlook is going to consist of?
I think one thing that affects the business outlook is more stability as opposed to rates, whether it be high or low. So I think having a stable business environment that is a little bit more projectable has a lot to do with it. In the 80s, we did business deals when interest rates were 10, 11, and 12%. So we've been here before.
Some of us.
Well, right.
I was
good point.
2 in 1980.
Right.
But 1984 was a great year.
I'm happy to lend you some experience here.
Yeah.
So
trying to catch up with you.
Yeah, so we've been here, we've done it, and I think one of the key factors there is, rates go up, things will slow down a little bit, but once they stabilize, and the environment gets a little more stable, then businesses will figure out how to maneuver that area. So I think stability is probably gonna be key. You know, rates start going down and, you know, that's gonna help. Just a stable business environment helps for sure.
Yeah. It seems like over the last 2 years, you know, we've had to, in some cases, educate business owners on, okay, why interest rates increasing affects the buyer's ability to offer what maybe was seen as top dollar, right? Because of their coverage ratios and things like that when they go to borrow money to do a transaction. And we saw deals have to be a little bit more creative, right? And then banks just sort of, in some cases, just slowed down to a crawl because they were so fearful of what might be, you know. And so we've seen sort of this ebb and flow. I agree with you guys. I think there's a lot of demand that's been sitting on the sidelines, and it's gonna come into play. Once rates start to go down, I think buyers are gonna say, okay, now's my opportunity. The thing maybe they don't really realize is that now they're gonna be competing, you know, with other buyers in that same market, whereas, you know, if they move first, they're gonna be more likely to get a good deal and get a good transaction completed, so. Any other comments or thoughts on general market outlook or anything that you guys wanna throw out?
I guess we'll see in November.
We'll see in November, right, and then it'll take probably another quarter or two to kind of see what happens after that, so. Yeah, it's always a fun time. I can't wait for the ads to start coming out.
Yeah.
Yeah, they're coming. Hey, thank you guys so much. It was fun to kind of just get everybody in one room and just kind of brainstorm a little bit. And Clayton and Sydney, thank you guys for being part of our summer team. You're doing an excellent job, so. All right, we'll sign off for now. See you next time. If there's anything that we can do for you, don't hesitate to reach out. Black Diamond Capital Advisory Firm. Love to add value to your company, either in terms of succession or growth, however you need us. We're here to help in any way possible. Thanks.